Imagine this for a moment. You have found your dream home, the layout is perfect, the location is ideal, it's exactly what you've been looking for, and you already moved yourself in, you know who's having which rooms, you know which furniture is going where, and you've already imagined yourself sipping coffee on the patio, and then you get this news from your realtor. There are multiple offers on the home, and even worse for you because you're financed, some of these offers are cash offers. So how can you possibly compete if you need financing? Is it even worth trying? Well, I got some good news for you. Today I'm going to go over exactly what you can do to stand out as a finance buyer, even in a market that's full of cash offers, like the Central Florida market right now. I believe it's about 40% of all transactions that are cash transactions. So trust me, it may not be as impossible as it might seem. And also, if you have been or are in that situation that you're looking to buy a home and you're not cash and you're worried about how you can tackle that situation if you're up against cash offers, stay with me for a little while because I'm, like I said, going to go through everything you need to know to get to that closing table, or at least give it your best shot. Because, like with everything else in life, there are no guarantees, but the more you know, the better you're positioned to get your offer to the closing table and not somebody else's. My name is Danholm. I'm a real estate broker here in Central Florida, and I'm trying to be your go-to guide, if you like, for navigating the tricky world of real estate, whether you're buying, selling, or actually just planning for the future. So if you're feeling a little bit overwhelmed by competitive markets or wondering how to make your offer shine in a world full of cash offers, you are at the right place. Let's get started and see where this takes us. So financing versus cash offers, that's the dreaded thing. That's the thing we're talking about today. And let's start by talking about the elephant in the room. Why is it that it's so hard for a finance buyer to compete against cash offers in the first place? Well, it really comes down to two things: certainty and speed. And I'm talking about certainty and speed for the seller. From a seller's point of view, from a seller's perspective, if you like, cash offers are a sure thing. There's no lender involved, there's no risk of the financing falling through, and in general, there are far fewer hurdles in the closing process. Sellers really do love that security. It is a bit like taking the express lane on the I-4. You will get to where you're going a lot faster than if you stay in the clogged up artery that is the I-4. Another thing, like I said, is speed. Cash offers often can close a lot faster because they skip all those extra steps that come with loan. The cash is ready. If they need an appraisal, which a lot of cash offers do, they do appraisals. They can get it done in a few days. They're not dependent on the lender and how they have to choose the appraiser and how they have to go through that whole underwriting process. So for a seller who usually is pretty eager to move on, this can be a huge advantage that there's cash on the table, nothing to wait for. You can close in 7 to 10 days. And unfortunately, that can actually make finance buyers feel a little overwhelmed, and they can feel like they're automatically at a disadvantage. And to be honest, if you're a finance buyer up against a cash buyer, you are definitely at some disadvantage because sellers will always see the cash offers as less risky and more convenient. But here's the thing you need to know: sellers, they don't always choose cash. A stronger financed offer can absolutely win if it's presented the right way. So how do you do that? Well, let's get into it and let's see how you can actually get yourself in a position where your offer stands out against even a cash offer. You need to obviously, first of all, position yourself as a strong finance buyer. So now that you understand the challenge, let's talk about the solutions, because there are several strategies that you can use to make your offer as competitive as possible, even when you're up against cash buyers. So let's break them down in smaller bites here. First of all, get pre-approved, not pre-qualified. This is a very non-negotiable item. Pre-approval is like having the golden ticket, if you like, in the world of real estate. It shows sellers that a lender has already reviewed your financial situation and is ready to lend you the money. Pre-qualification, on the other hand, is just a rough estimate of what you might qualify for, and it is only based on information you've given the lender, not proof that the information that you actually gave the lender is correct. And while you might know that the proof will support your application, nobody else does that, and nobody else knows that. So a pre-approval letter by the lender has actually seen your documentation. That shows that you're very serious. It shows that you have your financing in order and that you're solid. And it would really help in a situation where you're up against cash offers if you can get your lender to write a letter that is specifically for the property that you're bidding on, proving and showing to the seller that you have actually discussed that particular property with your lender. It also adds a little bit of a personal touch. It shows that your lender knows you well. It shows that you have an ongoing conversation with your lender. So it shows a lot about where you and your lender are in the process of getting you approved. Another option is to offer, if you can, a larger earnest money deposit. Even if you're VA financing or FHA financing, where you don't have to put down a lot of money, it will strengthen your case with the seller if you put down more money than you have to according to your loan offer. It shows that you're serious about the property. It shows that you are financially strong. And it shows that you actually kind of know what you're doing. So most buyers would stick to the standard 1 to 2%, some even less than that. You can really stand out if you can offer more, 3 to 5%, or maybe even higher. The more you can put down initially, even if you're getting your money back at the closing table because you're getting 100% financing, it really strengthens your case with the seller that you have the ability to put down that money. If you can't do it, obviously that's not an option, but if you can, that would really strengthen your case because it makes your offer look a lot more committed. You have skin in the game. And usually the earnest money deposit goes towards a down payment and closing costs. So it's not like you're throwing money away. And there are ways that you can get that money back if you decide for whatever reason to pull out of the deal, at least if you do it during the inspection period. Another way that you can really strengthen your offer is tighten up your contingencies. A contingency is a condition that would have to be met for the deal to move forward. I get you to the closing table. It could be that the deal is contingent on an appraisal, inspection, or financing approval. And truth be told, sellers really do love offers with fewer contingencies because they're less likely to fall apart. The less conditions you have for the purchase, the easier it is to move forward. I'm not saying that you should waive every contingency. And I'm also not saying that you should waive any of the important ones, such as the appraisal contingency or the inspection contingency. That is risky, and I would say, from my point of view, really stupid to do that unless you absolutely have to and you're comfortable with it because you know the home is okay. But here's some ways that you can make those contingencies a little more palatable for your seller. With the appraisal contingency, you can add what's known as an appraisal gap coverage, which, if you're confident in the home's value and you have the funds to back this up, you could agree to cover a certain amount of any appraisal gap. So what I mean by that is, let's say you're buying a home at $500,000. Your loan is contingent on the home appraising at $500,000. But it turns out it only appraises at 490. If you're happy with still buying the home, even if it appraises at only 490, you can put in an additional document in the offer that says that if the appraisal only comes out at 490, you will cover the last $10,000 cash out of your own money. That's huge for a lot of sellers. And you can also be a little more flexible on the inspection. If you, instead of rather having a full inspection contingency, you could maybe just say, I'm only going to do a 4-point to make sure that the house is standing and everything, and I can get my insurance in order. I'm okay with if little scratches here and there. If there's a floorboard missing, I can fix that. I just want to know that the house is not going to fall apart and I can get it insured. That you can do that, or you can opt in for a shorter inspection period. The standard, if you like, in the state of Florida is 15 days. A lot of buyers go for 5, 6, 7, 8, 10 days, maybe even 3 days, because if you have a really good realtor who has got a good network of home inspectors, you can usually get your home inspected in 1 to 2 days. So you can make your seller a lot more confident if you cut down the inspection period. Because if the inspection period to you is really only about getting the home inspected and not about getting a free for all card to get out of jail free card if you change your mind, then you really don't need a long inspection period. At least not in most cases. There could be instances where it is needed for whatever reason, but in most transactions you won't need a long inspection period. So if you're okay with it and you don't want to use your inspection period as a get out of jail free card, and by that I mean in the state of Florida, anyone who's buying a home can actually back out of the deal with no harm, no foul, and for no reason whatsoever during the inspection period. So for sellers, that's really a high risk period, because that's when there's the highest chance of the deal falling apart. That's during the inspection period. So if you're serious about buying the house and you can get it inspected quickly, cut down the inspection period as much as possible. It really helps the seller understand that you're serious about buying that house. And like I said, if you put in there that you're only going to do a 4-point or a structural inspection, that also means that you're showing your seller that you're not doing the inspection in order to renegotiate the deal based on small issues. You can also change the loan approval timeline. If you know, and you've talked to your lender about this, you can tighten up the financing contingency period. There's no need that it doesn't have to be 30 days or 45 days or any longer period. So if your lender is confident and they could push your loan through quicker, you can put it in a contract that you can close quicker, that you have a quicker shorter financing contingency period. And that would also make your seller much more confident that you are going to close and you're serious about that. Some buyers also write a personal letter to the seller. You have to be a little bit careful about that, because personal letters can, in some cases, be interpreted as a violation of discrimination laws. But there is a way you can write a letter explaining to the seller why it's important to you to buy that house, because it's really the house of your dreams, etc., etc. So if you're a little bit careful about wording, and that's definitely an option to do that. A heartfelt letter sometimes makes a difference, but like I said, be careful that what you write about and what you write in that letter. And also, you should know that your realtor cannot really get involved in writing that letter. That's not within the scope of what realtors do. But if you do decide to write one of these letters, it is important to focus about what you love about the home, not your personal circumstances. For example, you can tell that you fell in love with the natural light in the living room. You can't wait to host parties or family dinners or whatnot in there. That is a lot better than we're a young family looking for our first home. So try to keep it a little bit professional and yet personal, and then that might go a long way to persuading the seller that your offer has a little bit more personality to it. And then the obvious, if you work with an experienced real estate agent, your agent can actually be your secret weapon in competitive situations, because a great agent knows how to build rapport with the seller's agent. He knows how to figure out what's important to the seller, because it might not always be the cash that's the most important thing. It might not always be the closing time or a short closing. Maybe sellers want to be able to stay in the house for a couple of months after. If you work with an agent who knows how to ask the right questions and figure out what makes the seller tick and what the seller considers a good offer, obviously the first thing they'll say if you ask them is, the more money the better. But that's not always the case. Sometimes there are other things that are more important to the seller than whether or not they get an extra $5,000 or $10,000. One of the things that it could be a quick close, it could be flexibility with a move out date, or something completely different. It could be, I don't know, that you never take down the orange tree in the backyard or whatever. And there could be a lot of things that could be important to the seller. But the more you can tailor your offer, and that's my point, the more you can tailor the offer to meet the seller's specific needs, other than getting the most amount of money for their home. That's the kind of deals, the kind of information that a good real estate agent can get for you, and a good real estate agent can incorporate into the transaction. So everybody's happy. You get your house, and the seller gets exactly what they're looking for. There's another thing you can think about if that's financially an option for you. There are two things that can make you become a cash offer. So if you're really struggling to compete, there are programs out there that can help turn you into a cash out buyer, at least temporarily. One of them is a bridge loan. If you have enough equity in your current home, you can get a short-term loan that will give you the cash you need to buy a new home before selling your current home. Something you obviously have to talk to your bank or your mortgage lender about, but it's in some instances that's an option. There are also cash offer programs out there. There are companies that will buy the new home on your behalf with cash, making it a cash transaction to the seller, and everybody's happy. And then they'll sell it back to you once your financing is in place. There will obviously be costs involved with that, but it might be a lesser cost than missing out on the home that you want, or maybe having to buy a more expensive home because the home that you wanted is no longer available. These two options are obviously not for everyone, but they're definitely worth exploring if you feel that you have the financial background, the financial basis for that. Another thing, like I said, it's not always the money that ticks the seller, but sometimes it is. So maybe be prepared to discuss offers in excess of the asking price, especially in a multiple offer situation. A few years ago, it was quite common. Everybody was offering above asking price because they simply had to. There was no doubt about it. You couldn't buy a house without offering above asking price. But even in this market, if you're up against a few other offers and some of them are cash, it might be worth considering maybe offering a little bit above asking price just to stay competitive and just to show the seller how serious you're about buying a house. So you should talk to your agent about how much over the asking price that would be typical in that local area. And obviously also make sure that both you and your lender are comfortable with that number. There's also another option you can do rather than from the starting point offer more. You can consider adding an escalation clause. An escalation clause is something that became very popular, especially in Florida a few years ago, and it's still an option to do. What an escalation clause does is it automatically increases your offer up to a certain limit in increments if somebody else bids more than you have. So let's say you're buying a house, it's listed at $500,000. You're offering $500,000, and you add in an escalation clause up to, let's go wild and say to $550 in increments of $1,000. The way that will work is if the seller can prove with a legitimate written offer that's backed up by financing and cash that he was offered $525, your offer would automatically go to $526 because it goes up in increments of $1,000. That has proven to be a really strong way of increasing the chances of getting a home when you're a finance buyer, or even if you're a cash buyer for that matter. And it's a really great way to stay in the game without overcommitting. Again, you need to square it off with your lender and obviously make sure that whatever you put in that escalation clause is something that both you and your lender are very much comfortable with. But it's definitely an option to do that. So what do you think? Have you ever been in a multiple offer situation? And have you had any strategies that you used that worked for you, or anything that you wish you'd done differently? Please let me know. Share your story in the comments. I would actually love to hear them and see what other people are doing. And even if you think this is completely bonkers or some of my advice is workable for you, let me know. I really, really want to hear from you. Also, if you found this video helpful, don't forget to subscribe and hit that little notification bell, and maybe share it with somebody you know that might be navigating the home buying process right now and feeling a little bit insecure because maybe they lost out on a deal or two because they were outbid by a cash offer. Or if you're just looking for more tricks to stand out in this market, please subscribe. I promise I will upload regularly material so you can keep in the know about what to do in this market. Thank you so much for watching today. My name is Danholm, and I wish you happy house hunting. Until next time, bye for now.